Let's start with a new topic, bill of exchange. If you know the journal entries properly, if you know the concept, what you actually need to debit and what you need to credit, then this is an easy chapter for you. We will just add up few little concepts in your journal entry chapter, and then this is actually an easy chapter. So start with bill of exchange. What is a bill of exchange? It is an instrument directing a person to pay the amount specified in the bill. Say a person Mr. X and a person Mr. Y. So, an instrument which will direct one to pay the amount specified in the bill to other. How? I will explain you. Let's say that X is the drawer and Y is the drawee. Who is the drawer? Person who draws the bill or makes the bill. So, X, the drawer, makes the bill. You can have these small questions asking who is a drawer. So, person who makes the bill or draws the bill is called as a drawer. Now, who is a drawee? Drawee is the person who is directed by the drawer. He is directed by the drawer to pay or give his acceptance to pay. So, he is basically the person who will pay or give acceptance to pay. Now we know that one is making the bill or drawing the bill and other is accepting the bill. Now who is a payee? See, sometimes what happens is drawee will make the payment to someone. The person to whom drawee makes the payment, Y will make the payment to someone, either who is making the bill or anybody. X directs that pay this bill to say Z. So pay, the person to whom drawee makes the payment. Y is paying to Z. Paying to Z, and so who is Z? Z becomes my payee. You need to understand the abbreviations, because when you read the questions, how will you know that who is the drawer, who is the drawee, who is the payee? So this is a simple portion but then important also. Person to whom drawee makes the payment is known as payee. Okay, now some bills can be bills on site, some bills can be accommodation bill. I will step by step let you understand what it is. So just to let you know now, accommodation bill. Accommodation bill. What is accommodation bill? Bill drawn and accepted for mutual help, or when you are in need of money, X draws a bill on Y and then they get it discounted with the bank. That is, some discount is let gone and then the balance is received, and for the help of each other or for one person's help, we draw a accommodation bill. I will discuss this accommodation bill in detail later. Promissory note. What is a promissory note? Instrument in writing. First of all, it should be in writing. Undertaking by the maker to pay. that is undertaking by the maker, or a promise to pay consists a promissory note. Now second thing, discounting of a bill. Discounting of a bill. What is discounting? Taking amount from the bank before maturity. Say the bill amount is 10,000. Okay, and the bill has been made for 3 months. Now I cannot wait for 3 months. So what I do, I take this bill to the bank and tell the bank to discount it. So the bank will charge some discounting charges, because now I will not wait for the money. The bank has to wait for the money for 3 months. I am getting them right now. So instead of 10,000, say bank will pay me 9,500, and 500 is the discount, because I am receiving money before 3 months, that is right now, and the bank will wait for 3 months and bank will get full 1,000. So for their waiting charges, their discounting charges is 500. So it is income for the bank and it is expense for me. So taking amount from the bank before the bill is matured, then discounting of bill is done. Now next very important topic, days of grace. Days of grace. Some days are added to the date of maturity is equal to date of maturity whatever is the date of maturity plus, generally it is 3 days. Generally it is 3 days. So I will take a full-fledged example to explain you days of grace. Say that a bill dated 1st January, bill, the date is 1st January 2015, is payable 60 days after date. So 60 days, after 60 days there will be date of maturity. Now what do? I start calculating number of days. So 1st Jan is your date. So in Jan, the left days total 31 Jan. So on 1 Jan it is made. So January 30 days plus February. February has 28 days. So I will take 2 days of March. So that becomes 60 days. And I will add to these 60 days 3 days of grace, that is 3 and 63 days. So 2nd March plus 3rd plus 3 days of grace makes the bill payable on 5th of March. So this is the logic of days of grace. Now, if in question, now very important point again, if in question it is not given in days and it is given in calendar months, then what you will do? Say, now the question says that a bill is payable in 3 calendar months. So what will I do? If it is January, so I will take January. I will not say 31 days of January now. January, February, March. This is your 3 months. Plus, see, this is 1st March has come. So plus 3 days of grace. So 1 plus 3 is equal to 4. So 4th April will be my effective date. Now the third condition, if maturity day falls on a public holiday, say for example 26 January. So the rule is take the preceding day. Take the preceding, the day before it. Take the preceding day and your effective date will be 25th January. Now you have understood the logic. Let's come to a new word, endorsing the bill. It means transferring the bill from one person by the holder. Means two persons. When I transfer the bill from one person to another, transfer. It is known as endorsing the bill. Okay. Now as we all know, bill of exchange has three parties. What are the three parties? Bill of exchange has three parties. First is the drawer, second is the drawee, and third is the payee. And in a promissory note where there is promise to pay, a promissory note, there are two parties, the one who promises, that is promisor, the debtor, and the pay. While we do questions, we'll do detailed discussion on this. Now, what is bill at sight or demand? Bill at sight or demand. Have you ever seen a check? When I go to the bank, show a check, will they say no? There is 3 days of grace. No. On showing the check, the bank has to pay. So, on showing the instrument, when it has to be, when the payment has to be made available, it is called as bill at sight. That is, on showing, payment needs to be made. That is called as bill at sight or demand. Okay. Now, dishonor of bill. When bill cannot be paid by the drawee on due date, X our drawer, Y is my drawee. There is a promise to pay on the due date. When Y cannot pay on the due date, say he became insolvent, cannot pay on the due date, so that at that time we call it dishonor of bill, or the bill has been dishonored. Okay. Now, what is notary public? Notary public. A government officer. A government officer does noting of a bill when it is dishonored, and fees paid is noting charges. So when a bill is dishonored, there has to be a proof that the bill is dishonored. So the holder will go to the notary public and get it noted by a government officer called as notary public, and get it noted that the bill is dishonored. And some charges will be paid. Such charges are called as noting charges. Okay. Let's take some example by entries to have a better understanding. I will say this is the books of drawer. And I have books of drawing. See, what happened is drawer sold goods to our drawing. So the first entry of sales will be debtor account debit to sales. Debtor account debit to sales. And entry for purchase here will be purchase account debit to creditor. Okay. Now, on drawing, accepting or receipt of a bill, the entry. Now, this is an important entry. Pay attention. Drawer will always receive. So, the entry will be bill receivable account debit. Bill receivable account debit, and assert, because he has sold goods, so he need to receive. So, bill receivable account debit to debtor, and our drawing needs to pay. So entry done will be creditor account debit to bill payable. See, in assets and liabilities also check that bills receivable are always an asset, so we are debiting them, and bills payable are always an liability, so we are crediting them. Okay, now on due date you will receive the amount. So on due date, on receiving the amount, the entry will be cash account debit, and the debtor is no more in picture. It is the bills receivable now. So I am getting the amount from the bills receivable. Cash account debit to bills receivable. Bills receivable are my asset. Debtor and debtor have been cancelled earlier, and I present the bill, I get the money. Cash account debit to bills receivable. And here creditor is not in picture. Creditor credit and creditor debit has been cancelled. I need to pay. So bills payable account debit to cash or bank, whatever. I hope you have understood these simple entries. Okay. Now going further to another concept. When bill is discounted with the bank, common entry, so pay attention. Bill discounted with the bank. I cannot wait for the date of maturity. We just discussed date of maturity. We add, say it is 3 months. 3 months plus date of grace. That becomes my date of maturity. I will not wait by then. So I go to the bank and I say discount the bill for me. So what my entry will be? Money will come into my bank account. Bank account debit. Then will I get, if the bill is of 10,000, will I get full 1,000? Then what the bank will get? So some discounting charges have to be debited. They are my expense. Discounting charges account debit to bills receivable. Say bills receivable is 10,000. 9,000 banks give me now, and 500 is my expense because I could not wait for 3 months. So discounting charges paid by me to the bank. Now bank will get the money after 3 months, but I get it right now. That is known as discounting of bill. Okay. Let's start with the practical questions now for a better understanding.